For our COBT friends, it's Maynard, Mike, and Arjun here with something spectacular. In our history at COBT, there's been a huge source of energy that we haven't paid enough attention to, but today we're going to remedy that. We've got with us Dr. Hongcen Wei. Hongcen leads, he's a commodities strategist, but he leads coal research at Goldman Sachs, and he's going to tell us about Goldman's reinitiation on the macro coal space. It's going to be fascinating. Before he was at Goldman, he's been there for 2 years and 8 months or so, I think, Hongcen. Before that, he was at the University of Chicago for a long time teaching math. Before that, he got his PhD in economics at Chicago and also studied math at Renmin University in China. So his credentials are phenomenal. Hongcen, we're so excited to have you. Thank you for joining us to talk about coal.
Thank you very much for inviting me, and I'm very happy to be here to talk about coal and generally energy transitions. And for my background, I actually majored in mainly economics and finance, and math as a side major.
Well, we're really excited to visit with you. We've been getting up to speed, reading your reports. Thank you for sharing them. And shortly, we'll jump in and talk about what's happening in world coal. Mike, what would you tell all of us to get us kicked off today on the markets and anything else on your mind?
Yeah, really want to hit 4 areas. First we'll talk about the economics, then we'll talk about commodities, then we'll talk about the equity markets, and then we'll talk about coal, what's going on there. First, from the standpoint of economics, really light week for economics. The only real thing that's coming out this week is retail sales. They came out today a little bit stronger than people would expected, and so bond yields are kind of creeping up a little bit. And what that's pretty much saying is that the consumer is still pretty strong, and there's concerns that the Fed may not be done hiking rates, and so that's really sold the market off, the equity markets. The second one is on commodities. Over the last week or so, just this week, crude's down about $2.50 a barrel. We're down around $81 in WTI. One of the things I've been saying over the last 2, 3, 4 weeks is that, the tone of the market has really changed on crude oil from the standpoint of everyone was worried about economics, really demand, and now they're really worried about supply. And I'd say this week, people are worried that some of the stats that are coming out of China are a bit weak, and so crude's taking a little bit of hit. People are really wondering whether, demand isn't clear yet, so that's a point on that. I'd say the other thing that really has been pretty astonishing in the last week is just what's happened to European natural gas prices. Gas prices in Europe around 30% in the last week. U.S. prices are actually down, and the reason why is there's concern there's going to be an Australian worker strike on these LNG facilities, and we're talking about 10% of exports worldwide. So we don't know how that's going to develop, but that's a concern out there, so something to keep an eye on. I'd say from the standpoint of equity markets, today we're down about 300 on the Dow, about 1% on the S&P. And really that's going to, if we look at over the last couple of weeks, we've had all the S&P earnings really reported. We talked about retail sales earlier today. This is going to be a big week for retail companies, the Walmarts, the Home Depots, Targets, stuff of that. So they're going to be reporting. We're going to see how the consumer is holding up. And so the last thing I really would want to, focus on here is just the coal markets, right? Hongcen is going to be talking about what coal prices are doing with supply and demand. I just really want to talk about how the equities have performed. And if you look at Rotterdam and Newcastle prices, coal prices, over the last 2 years, you're down about 20%. But if you look at a coal index, U.S. coal index being Arch, Alliance, Peabody, and Consul, it's up about 120%, those companies. If you look at over the last year, coal prices are down about 65%, and that coal equity index is about flattish. And if you look at year to date, coal's down about 50%, and those indexes are pretty flat. Those coal equity indexes are flat. And I think the takeaway is that they are decoupling from price, and the reason they're decoupling from price is because there's still a lot of free cash flow of these companies. These companies, the balance sheets are in great shapes now. A lot of those companies came out of bankruptcy, and so it really is kind of like what you're seeing with the E&Ps, just give all the return back. And so I'm really interested in hearing what Hongcen has to say about just the fundamentals, because right now equities are holding up better, they're decoupling, and so we'll just leave it at that.
Yeah, very interesting. Arjun, what would you throw in here as we turn to our coal conversation?
Maynard, as the oil and gas sector was recovering over the past couple of years, one of the main questions we would get when we were writing Super Spiked and talking about returns on capital and the sector is sort of making a comeback was, well, that may be true in the short term, but aren't oil and gas equities simply going to go the way of the coal sector, which of course, any good American investor knows we had a shale gas boom. It displaced a whole bunch of coal demand in this country. And a lot of the companies that were publicly traded 10 or 15 years ago went bankruptcy, went away. It's a much smaller sector today. Isn't that inevitably the fate of the oil and gas sector, even if the next few years are a little bit better? So, one of the things I thought, well, I've been doing this for 30 years. I actually haven't spent a lot of time looking at coal, to my regret. So let's just look at coal supply demand. And to my shock, in 2022, we had all-time record highs in global coal consumption. So yes, it fell dramatically in the US as shale gas was developed. And yes, it had been falling quite extensively in Europe and some other OECD countries, but that developing country growth, clearly in this case dominated by China, overwhelmed the declines we saw in the OECD. And so we've seen over the history some periods where coal demand has plateaued, but it's then made new highs. And the question is, why is that? We all know there are many different ways you can do power generation. You can do nuclear, you can do solar, you can do wind, you can do natural gas, you can do residual fuel oil even if you want. Yet coal continues to grow in demand primarily in the developing world. Obviously, it is a domestic resource for many countries like China, India, Bangladesh, Pakistan. It is often low cost. It is available 24/7, 365. You don't have to, you might import some, but it provides local jobs, local tax revenues, local bureaucracy, local government influence. And so for a lot of reasons, coal continues to grow. So when we look at the fate of the oil and gas business, we're still waiting for coal to peak. And again, there are many different ways to generate your power. You don't have to use coal. So this idea that oil demand was going to peak anytime soon, that's something we spent a lot of time in the last few weeks pushing back on. It's a similar theme. You might be able to take some steps to reduce oil demand in US, Europe, and rich developed countries. But the quantity of people in the rest of the world who are using a fraction of the energy we use, they are going to be using a heck of a lot more of all types of energy. And that includes a lot of new stuff. Nothing I say, nothing I write about is in any way ever against new stuff. In fact, we're going to need it. You can't have 1 billion people using multiples the energy of the other 7 billion people on Earth. So it is, how do you provide energy for the rest of the world? And coal is going to be part of it. Oil and natural gas is going to be part of it. And we better hope some of these newer technologies scale up. I think the final thing, though, I just want to mention, Maynard, is sort of lessons from I'm going to say now, in this case, the US coal sector. The US coal sector did become very out of favor. And I'll dare say, call it borderline uninvestable for mainstream investors. And I think, are there lessons that the oil and gas industry should learn from that? Can those companies get insurance? What is their capital market access? And since we don't know, I may have a positive view of oil demand. I may have a positive view of profitability. I may see why the developing world will benefit from a healthy US and Canadian oil and gas industry, but that doesn't mean everyone's going to agree with me. So what are the steps the US and Canadian oil and gas industry should be taking today that they can learn from the coal sector while they're still in a position of strength? What should they be doing in terms of self-insurance? That is something this industry already does in part. How do you build that up? What do you do to protect capital market access and bank access? Do these steps while you are still investable. And I think that is a lesson to take away from at least I hate to say demise because they're still around, but the significant derating of the US coal sector. And Maynard, with that, I'm going to turn it back over to you.
Fantastic. Well, Hongcen, as we jump into this, I think I mentioned a little bit about your background, which is fascinating. And you've been at Goldman for 2.5 years or so. And Goldman, you really led the effort in June, towards the end of June, to do a global coal launch. And so I think maybe one interesting place to begin is to talk about, you personally. Why did you want to get involved with that? Why did you take that assignment? What was the thinking? Goldman has a vast energy research and commodities research effort. What was Goldman's thinking about why this was the time to do a launch on coal? Just talk to us a little bit about the personal and professional reasons that went into the June report.
Of course. So back in academia, my research topic is around the theme of the interactions between finance and economics, essentially the relationship between the Main Street and Wall Street. So, for example, my dissertation was about the wage inequality effects of financial deregulation. So essentially how these two parts will interact with each other. So I had actually no exposure to commodities at all during my research period, but I actually found out after I joined Goldman that commodities are exactly the same topic in terms of in the center of, in between economics and finance. So on one side, we have very strong fundamentals that actually drive the markets. On the other side, we also have very volatile and very active financial markets on commodities. So that is exactly the same line of interests as my academic interests. So as for Goldman, we are relaunching our global coal coverage. So we used to have this coverage a few years ago, but now we think it's a great time to relaunch this coverage for, I think, mainly three reasons. The first one is energy transitions, as Arjun was saying. So when you are looking at energy transitions or decarbonization, it's not the full picture to look at only the solar, the wind, all these new clean energies. To decarbonize, you need to decrease the carbon emissions, where coal is actually the largest part of the global carbon emissions. So we take the approach to look at the energy transitions domain on one side, coal to reduce the carbon emissions, and on the other side, to promote the new energies. The second reason is coal is crucial for natural gas research, for our global natural gas balances. So for natural gas pricing, if it goes up, then you will have the gas to oil to gas economics. If gas becomes cheaper, then you will have the other side, the coal to gas and gas to coal switches. So these two interact together, and coal is definitely indispensable for the global gas views. And the third one is, of course, the coal market has definitely revived, and all these volatilities and price hikes in the past 2 years during the energy crisis make it a very good global investment opportunities. So these are the reasons why relaunching this coverage, and we are excited about it.
No, it's great. And maybe just as an additional lead-in, that was great context. I think maybe just kind of framing up the size and scope of coal production and use and its percent of the world energy stack. I think, Arjun, I believe you alluded to this, but in 2022, we used more coal than we have ever used. I think the number was 8 billion tons, something like that. But give us a sense, Hongcen, of just how important is coal, as a percent of the global energy complex.
Coal is indeed a very large fraction in the global energy consumption, especially for the emerging economies, mostly in the Asian countries. And if you look at China's energy balances and Indian energy balances, coal is definitely dominant in their energy consumption. Last year, indeed, the global coal consumption went up above 8 billion tons, and the production also spiked to above 8 billion tons, which are a record high.
Picking up on the volumes, Hongcen, it also, so coal is traded around the world, and then obviously what happened with Russia and Europe and the war in Ukraine and the sanctions, that was highly disruptive to flows. Do you mind just giving us a feel for the big exporting countries, the big importing countries, and just kind of the volumes of trade in coal that are moving around the planet?
Yeah, so the global trade market of coal is actually a little bit special compared to oil and gas. So oil, the trade market of oil is about 40%. So if you just count the imports and exports, so the total trade volume out of the total consumption or out of the cocoa total production, oil is about 40%, gas is about 30%, but coal is only 10%. So that makes the domestic balances of the main import and export countries very crucial and has a lot of market power in this market. So on the demand side, it's mainly China, India, and Japan, Korea, and Taiwan. So these are the top 5 import economies. And China is more than 20%, almost 25%, which is top 1, and India is almost 20%. So the total import or export, the trade volume is about 1,000 million tons, so 1 billion tons. So 25% of that means 250 million tons for China and almost 200 million tons. So this year we have a forecast of 175 million tons for India. On the other side, on the export side, it's even more concentrated. So number 1 export economy is Indonesia. Indonesia exported 465 million tons in 2022. So that is like 46% of the world. And the number 2 is Australia. It used to be around 20% or 200 million tons. Last year, they had some logistical issues, so it was 180 or 18%. Number 3 was Russia. So that also signifies how significant the EU's ban on Russian coal is for the global coal trade market. So that is another 18 to 20% of the total export market.
And I think there was a really interesting stat in your rollout report, or at least it jumps off the page to a new reader, which is, so China is 25% of those import volumes, but that's only 5% of China's total use. So it's just a little bit that they're using that is 1/4 of the import market.
Yeah, so there is this great asymmetry between the great market power of China through its imports on the global coal trade market versus the very small impacts of the Chinese imports on its own consumption. But of course, it's also important for the domestic coal balances. But that allows a lot of flexibility in China's import and generally energy policies.
And maybe, Hongcen, just while we're on it, we're talking about thermal coal numbers, but do you mind just touching on the various flavors of coal and kind of what you see across all flavors, just for our viewers, make sure we're all talking about the same, just make sure everybody's acquainted with the different types. We all know lignite is a bad one, and that's what the Germans are using, but I think if you talked about some of the flavors, that'd be interesting.
Sure. So all the numbers I just mentioned are for the total thermal coal. So we have different coal grades. From the highest to the lowest, we have anthracite all the way down to lignite. So lignite has the lowest calorific value per weight, and it's also the dirtiest if you use it to generate power. On the other side, you have the high calorific value. We usually call it high-grade coal, which is used mostly in the EU area and advanced economies like Japan and Korea to generate power. On the other side, for more emerging economies or developing countries like China and India, they tend to use medium calorific value, so medium grade coal to generate power. Or you can also mix, like it's called blending, different grades of coal together to have the medium grade, which is what China and India have been doing. So
But
there is really this little bit of segregation across different grades of thermal coal in the global coal market. But currently we have less and less visibility on the data across different coal grades. So, but we still have some conjectures or estimates across different grades.
We mentioned it up front, 8 billion tons a year of use, but only 1 billion tons or so is getting traded. So everybody's kind of sort of using their own stuff. So when we talk about the Germans and lignite, they just happen, isn't that what they have in Germany? Their coal is lignite, and that's why they're using it. Is that a fair?
So Germany and Poland, definitely they are history dependent. But now, so previously they built up all those coal power plants, and they have those heritage. And now they actually rely, especially Germany, they rely more on imported coal. And so lignite is just one part. So for Germany, it has both lignite coal power plants and also hard coal, which means higher grade coal power plants.
So maybe just while we're all making sure we speak coal fluently, if you build a plant, are plants fuel specific, or can you put pretty much whatever type of coal you want into any given plant?
So it's actually the former, but theoretically you can throw in anything to burn, right? So last year during the energy crisis, and people were worried about the natural gas shortage in Europe. They were actually discussing throwing in wood pellets or even trash into the furnaces to burn to generate power, but those are super inefficient, and the heat content of, like, for example, wood pellets won't be completely utilized during the burning process, and the carbon emissions are also very high, just because those furnaces, those boilers were not made to burn like a different type of fuels. Even within thermal coal, usually the specific furnaces in the coal power plants are designed to burn a specific range of calorific values of coal. For example, last year, when Japan was facing some shortages in their natural gas and coal, they were having the issue that most of their coal power plants were designed to burn high-grade coal. But the high-grade coal had a lot of price premiums, the Newcastle 6000. It was too expensive, so they were actually trying to adjust those furnaces to make it to be able to burn lower grades, but still quite high, medium grade coal. So it's quite constrained actually.
When we think about coal pricing, Mike referenced there was a big run up in coal pricing, and now it's come back down. Historically, it was not volatile. I think it was
historically it was like 60 or 70 to be the average for the Newcastle benchmark for 6,000 Newcastle benchmark coal. It has been quite a long time, like for the decade before like 2015, and then it just went up a lot during the energy crisis in the past 2 years. So last year it reached the record high of $450 per ton, and so that was mostly pushed up by the extreme local deficits of Japan and also the EU for both the Newcastle spikes and also the API2 spikes in Europe. And this year, in the beginning, it was softened. The balances were softened, and then the prices actually fell a lot by around 70% in the first quarter of this year. And currently, the Newcastle price is standing at around 130 something, $140 per ton. So it has already been around like less than 1/3 of its peak price.
Hongcen, for people that haven't read your report, your launch, I think it was called "The Bear is Here to Stay," and it was based on 3 pillars: is sort of reroute, rebalance, and revival. Exactly. And so when I think about how coal prices got to ridiculous levels, it was because natural gas storage in Europe was really, really low. You had a hot summer. You had the Ukraine crisis. You had coal inventories in India at that time really, really low, like 10 days of supply or something like that. And so, when I think about your report now, maybe you can give us some thoughts on why you're bearish. Is it bearish because the inventories are above where they need to be? Is it because supply is coming on, or is it just demand is just going to be rolling over? What's the premise of your long-term bear call?
So that's exactly the reverse of the three contributing factors that pushed up the prices in the past 2 years. So as you said, our three pillars, reroute, rebalance, and revival, they all contribute to the bearish outlook. So so we have this bearish view on the global coal markets, and we call it the bear is here to stay. So the three pillars are reroute, rebalance, and revival. So in the past few years, we have quite eventful global coal markets. It started with the informal ban of China on Australian coal around 2020. It's informal, so there is no specific date. And then we have the natural gas price increases and the China power crunch, followed by the Indonesian self-ban on exports in January of 2022, which intensified the market and further intensified by the EU's ban on Russian coal, as we all know, last year, which was announced in March and then implemented in August, and compounded with the heat waves during last summer. So like before this summer, last summer was the hottest summer in the weather records. So the global coal prices were pushed up to the record high of $450 per ton for Newcastle and 400 for API2, which is the European benchmark price. So in the past two years, we see the main reasons behind the price spikes to be first, the ban, which requires the reroute of the coal globally. So Russia has to reroute its exports, and EU has to resource its imports. And the second one is rebalance. So just because of all these events, the local balances were super imbalanced. Like for the EU and for Japan, they have extreme local deficits. So there is the need to rebalance. And last year, also due to the shortages and very high prices of natural gas, there was the revival of coal consumption. So all these three last year pushed up the prices a lot. And this year, we expect them to revert and flatten or reverse to the other direction to decrease the global coal prices. So the first one, so I'm just going to briefly cover the three one by one. The first one is the reroute. So last year, the EU, so actually to our surprise, maybe to the surprise of many people, last year the global coal balances were actually in surplus. So if you just count all the exports and imports and all the supply and demand with the domain of the global coal market. So it was actually the extreme local deficits in the EU after they banned Russian coal, and also in Japan and Korea, Japan and Taiwan, that made the local balances extremely tight and pushed up the prices. So after these bans, the EU has had to resource its coal imports from other countries, and they made it. They accomplished actually more imports in 2022 than 2021 last year, as you can see in the chart on the left. So they reduced their Russian percentage in their coal imports to almost zero. And then on the right-hand side, they increased their imports from non-Russian exporters, the blue lines. And the same thing needs to happen to Russia. So Russia, of course, without the largest importer, the largest buyer of their coal, they have to reroute their coal imports from the European market to Asian market. So they had also been trying to do that, but there were a lot of logistical issues and constraints. For example, their eastern routes by sea and by land, both have the capacity constraints, so they could not immediately reroute too much of their imports into the Asian buyers that were still open to buy their coal, such as China, India, and South Korea. So that delayed or that made their rerouting process very gradual and slow. So they are still in that process. That also led to the huge discounts in Russian coal price last year. And it was almost 60% discount, and currently it is still about 20% compared to the Newcastle benchmark.
Hey, Hongcen, can I just ask you while we're right on this? So is what the world is doing here is Australia and Indonesian coal is going to Europe, and Russian coal, instead of going to Europe, is going to Asia. So it's like...
It's got a reshuffle. Yeah.
Yeah.
So for Europe, it's mostly South African and Colombian coal, just because of the geographical proximity.
Okay. Interesting.
So China, India, and South Korea are buying coal from Russia, but they are constrained with their logistical capacities. So just anecdotally, it was even profitable to first transport the coal from the eastern side of Russia to the western ports, and then ship it around all the world, around the Europe, and then Africa and India, then to China and Korea. It was even profitable to do that during the reroute. So following that, of course, we are having the rebalancing process in the global and also local balances. As I said, to many people's surprise, the global balance was actually in surplus, but it was the extreme local imbalances, the extreme local deficits that drove up all the volatilities and price hikes in the coal markets. So this year, we are expecting Asian demand to recover a lot from the drop last year. Both are primarily driven by Chinese demand, and for Europe, we expect they use less coal this year just because of the reversal of the prices of natural gas and coal. On the supply side, Indonesia is ramping up its production and exports, and we also expect Australian exports to recover to their previous average. So all these assumptions are quite conservative, but even based on these conservative assumptions, we expect a much softer global and local balances in the coal market. So lastly, on revival, before the energy crisis of 21 and 22, we can see here most of the European countries, like the EU economies, were having declining coal power shares in their power generation, but it was the high natural gas prices and the shortages in natural gas, especially after their ban on Russian coal, that they had to reuse or revive the coal consumption to generate power, and they had a higher, if you look at the German line, which is the dark blue line, they actually had higher coal power share in their power generation stack. So starting from there, we don't expect that coal consumption revival to last, and just because of the natural gas price went down a lot also since last year, so that will revert the gas to coal switch back to coal to gas. Of course, that did not consider the current strike threats of the Australian export capacities. So altogether, these three forces formed our bearish outlook for the global coal market for the next few years.
Hongcen, maybe I'll jump in here. I've a couple longer term questions, and I know your focus is on, especially at Goldman Sachs Commodity Research, is going to be on that traded market, which, as you noted, was a portion of the overall market.
Yes.
But I have a question sort of as you build out long-term balances. If we focus just on Asia, which has 1.4 billion people in China, about 1.4 billion in India, and roughly the same in the other Asian countries, that's a lot of people in general using just a fraction of the energy that we use here in the US or Europe or other parts of the world. To the extent any of those countries, clearly China and India has coal, and some of those other countries do as well, is there any reason to think they're not going to use their coal in growing quantities as those countries rise up the GDP ladder and lift people out of poverty and attain middle class status? Is there any reason, whether it's environmental, energy transition, or otherwise, to not think that there will not, let me say it positively, there will be growing coal demand? Would there not be from those countries?
I think they are, and we have already observed their increasing trend in coal consumption, especially in China and India, right? So China has ramped up coal production, especially after its 2021 power crunch during the summer heat waves. So they really faced the shortages of power and the threats of blackouts, which incentivized them to produce and use more coal to ensure the energy security. So for the longer run, I think all these Asian countries definitely have the incentive to decarbonize and approach carbon neutrality, but that is kind of a longer run approach. Like, for example, for China, it has the carbon neutrality the target was the target is 2060, and for India, I think it is 2070. So in the long run, they will definitely ramp up their capacities, their generation capacities for power from natural gas and renewables. And as a matter of fact, India, I think they are trying to have more natural gas generation capacities to replace part of their coal generations.
The two related follow-ups to that I think ties into your focus on especially the traded market is, I've presumed that if you have coal as a domestic resource, you're definitely going to be using it during these early and even middle stages of economic development. But perhaps, again, with your India as an example, you may not try to import more coal. So you'll try and limit your coal growth to your domestic resource. So is it fair to say the international market may not grow as more, the traded market, whatever the right way to say that is, and that coal demand growth will be limited to whatever the domestic resource growth potential is? That's probably question one. And then the related question two is the tie into LNG. I've been personally skeptical that someone would replace domestic coal consumption with imported LNG, which is often 5, 10x the price. But perhaps LNG might replace the extra demand growth that you are going to have that you cannot meet from your domestic coal resource. So sorry for kind of a long-winded question there, but I think you were following me, and I'd be curious your thoughts on that.
Sure. For the longer run view, I think for the global trading market of coal, I think both demand and supply tend to decline in the long run. Like if we look at 2030 or 2040s. So the primary reason starting now would be exactly the domestic ramp up in production, and that is primarily in China and India. For example, previously China kind of cracked down their coal production and consumption since 2015. But in 2021, as we just discussed, they had a power crunch, and they really realized the importance of coal production and coal inventory. So they used to have the 14th five-year plan of coal production to be under 4,100 million tons. But last year in 22, so just 1 year after that, also after the power crunch and the Ukrainian issue, they produced 45,000 million tons, which is like more than 50% of the total production of the world. And India is more or less doing the same thing. Last year, they produced 850 million tons, and this year, Indian fiscal year, they are looking at 1,000 million tons. So even with our conservative assumptions, they may produce about 950 million tons of coal. So globally, we do expect the global coal trade market to decline, but domestically, they are ramping up their production and they are increasing their coal consumptions.
And do you see coal being displaced by LNG? Again, I'm skeptical of that. I think LNG will meet extra power demand needs, but I don't see countries shutting off coal to import LNG. But I'm curious if
that is definitely depends on the country. Okay. So I guess maybe one example is Pakistan. So I think their previous plan was to exactly do that, to have more natural gas power plants and less coal power plants. But last year they had blackouts due to the shortages of LNG imports, so that they are currently back to ramp up coal power generation capacities. Same thing for a few other Southeastern Asian countries. For India, so previously, India, I think theoretically they are still having that plan to replace coal power generation with natural gas power generation. Previously, in like 2020 and before, the coal minister Joshi announced that they will stop importing any coal in the fiscal year of 22. But of course, that was very difficult to accomplish. And this year, they refreshed that goal to the fiscal year of 25. So according to my balance, that is still very difficult to do. But you do see their policy goal of replace more of the coal power generation capacity with natural gas generation capacity. But for China, it's completely a different story. I think more than 10 years ago, there was a very widespread discussion on whether China should follow the US way and also the EU way to convert the coal generation capacity to natural gas capacity. For example, US has really been successful in that. 10 years ago, coal power generation capacity was around 30% or 1/3. Currently, it is only 16%. So it's like more or less halved. And according to our equity analysts, it will be around 6% around 2030. So the US is really successful in that path. But for China, China has definitely seen what you have just said, right? So they have such a large coal production capacity and coal production levels, and despite it's sometimes, I guess most of the times, more expensive than imported Indonesian coal, but due to the large magnitude of the coal production, it will be still difficult for them to convert all the coal generation capacity into natural gas capacity. So around 2015-16, I think China has decided to kind of skip the natural gas step to directly convert coal generation capacity gradually to the renewables. As we can see that China has been quite dominant in many types of renewable generations, like especially solar panels, right? So they are doing that by in a much more gradual way. And the primary concern is energy security and the reliability of renewable power generations.
So Hongcen, you referenced it up front when, well, this whole thing is the context is Goldman's reinitiating on the global coal industry. Data and finding data on coal usage. How hard is it for you to get all this data? Where do you get it? Do you travel? Do you find yourself, like, how do you do what you're doing, which is a pretty daunting task, the global coal market?
Yeah, I hope I can travel more to coal mines to collect data firsthand, but that would be very difficult task. So we still have a few very good coal data vendors. So those are our primary data sources. But I do see the striking differences between the coal data and, for example, oil and gas data. So in the coal domain, we have much less visibility and data availability. So like, for example, like the coal grades data, the coal data across different grades, I think we used to have it back to, like, for example, 10 years ago when we had our previous global coal coverage, but no more for now. It's very difficult to have a very complete view across different grades of coal across different basins.
Does that create an opportunity for the people who are still participating in the coal markets, that things are harder to know prices and it's just a more confusing market? So as a result, for people who are involved in it, it's
I think there are
profitable.
definitely the opportunities for the information advantage and also for the insight advantage in this market.
And so any feel for if Goldman is doing this, are more investors, other financial houses, other financial players, are more people getting interested in coal markets? Is that more broadly happening?
We do see interest and demand from our clients, and I think some of our clients are kind of also initiating something on the coal side to take the investment opportunities in this domain, especially after observing the price and volatility activities in the past 2 years. So, like, for example, we generally have two types of investors. On one side, we have financial institutions who either directly invest in coal as a commodity or invest in coal equities. So they are definitely interested in the global coal view and global balances and fundamentals. On the other side, on the corporate side, of course, the coal producers and related industries, for example, logistical industries that transport coal, they also, of course, are interested in the coal fundamentals.
So one thing, Hongcen, coal is such a target for reducing emissions as an industry, and so many organizations around the world have coal as sort of the bad guy, and they try to put pressure on coal. What do you hear from? I know so much of this is state-owned companies, but as you listen to coal producers, is it getting harder and harder for them to run their businesses and to produce the coal, or is it in a steady state? Like, do you feel the world's regulatory and financial pressure on coal is going to have an effect on coal production?
I think there are definitely some impacts, especially on the public coal firms, right? So, for example, I think it's all reported that Mitsubishi has been selling some of its thermal coal mines in Australia and other places. Maybe they are facing some pressure to do that, and we also observe, like, for example, from the oil side, some firms became private just to avoid extra ESG pressure. But I guess on the macro level, we definitely see the ESG pressure could lead to underinvestment in this domain, in the fossil energy domain, which could be the start of another super cycle that, according to our view, that could generate shortages in fossil fuels and price hikes.
We hear about every kind of energy technology in the world right now, right? There's no flavor, there's no experiment that is not happening. in the world of energy right now to try to create a new, better form of energy. But you never hear anything about clean coal. Is there anything happening in coal from a technology standpoint that might make it meaningfully, cheaper, cleaner, better, less impactful? Obviously, there's carbon capture, but what is going on in coal from a technology standpoint?
I think there are definitely some developments in coal power generation techniques. For example, China is currently having, I think, almost all its large and new coal power plants with a new technology called ultra supercritical coal power generation, which is, so I'm an economist, but essentially it means it will be more efficient and emit less carbon dioxide. So, but that is definitely happening in China, and Japan has been leading this space for quite a while. But you may not observe the similar actions in, for example, the US or the EU, which have been actively phasing out coal power generation. Just because when they are looking at their coal generation capacity, they are just considering retirement, right? Instead of refurbish all the coal power generators and increase the efficiency. So their plan is, so that result in a dirtier and dirtier coal generators in these countries, which are still there running. I guess for the carbon side, for the carbon capture, it's like always the economics, right? So if the carbon price is high enough, as we are like proposing a global carbon price, which could be very efficient, especially according to my eyes from the Chicago School of Economics. So we definitely prefer a market for carbon. And so as you can imagine, if the carbon price is high enough, then you will get such technologies and you will get such practices in power generation for coal, for natural gas, for every power generation technologies, and also for other uses of coal and all the fossil fuels.
Hongcen, we started out talking about both the equity traders, commodity equity traders, and commodity and just equity guys in general. And I'm curious to hear your feedback on what was the response to this report from traders in the commodity as well as the equity investors. In pretty much in response, you saw the EIA came out like a week ago and said that U.S. Coal production is going to be going from like 580 million tons to 470 million tons. So like an 18% decrease year over year. And exports were going to go up like from 16 to 23%. How are the dynamics of that going to work out from a pricing standpoint? And maybe, like I said, what was the feedback from equity investors to your launch? And because the reason I say that is free cash flow yields has been one of the big reasons, return of capital has been one of the big reasons that these stocks have been able to outperform. Do you see that over the next 12 to 18 months really not being there, the free cash flow yield really not being there?
So while we cannot really specifically comment on the equities, but I guess generally, I think back to a few points you mentioned earlier in the beginning that there is this divergent trends in equities and coal as a commodity. I think there is a lag in coal, just because like when they sign up their maybe long-term contracts, those contracts were signed maybe at a much higher price, just because of these huge price movements from last year till now, right? So, for example, if you produce and you sign a contract at the beginning of this year, it was still over $200 or around $200 per ton. But if you sell it now, it may appear in your earnings for this quarter, while the price is only $140 or $130 per ton. So there is a huge premium on these long-term contracts. So I guess that may be one of the reasons that drive these divergent trends. And generally, I'm maybe you were asking about the U.S. Coal industry. So I think especially last year, last year highlighted the importance of the logistical industry to transport coal in the U.S. It was very much constrained by every way of transporting coal. Like there was railway issues from the labor, the labor shortages, wages, and strike threats, and there was low water levels, so that you can also not barge the coal, especially for the Illinois basin in the middle of the country. And in the west, for the for the Power River basin in the west, there is just always this limit on logistical capacity to move it to the coasts and exports to, for example, Asian countries. So it's just always constrained, and the domestic consumption and domestic demand has been declining, and especially with coal phase out, it will decline furthermore. So that will definitely lead to less production, as you said. On the east side, the ban on the EU's ban on Russian coal definitely opened some opportunities for the Appalachian producers to export to the EU. But last year there was the logistical issue, so they did not manage to export a lot to the EU. This year, natural gas has been much cheaper than coal in the EU till this month before the strike threats. So the exports to the EU from the US has also been quite limited. But overall, US exports have been increasing this year a little bit.
So maybe just a final one for me and a little bit of a follow-up there. So you've got a little bit of we had a big bull phase, you got a little bit of a bear phase you're calling for now. I was really struck that crude oil looks like a calm commodity compared to, you're trying to forecast these coal prices and the volatility they show. Are there a couple to three factors you're looking at? Obviously, I'm sure weather is one, some of these geopolitical issues where you'd say, okay, hey, this bear call now needs to turn into a bull call. And let's just say over the next year or so, what are the key things you're looking at to change your view, perhaps?
I guess
or risk to your view is probably the better way to phrase it.
Of course.
Yeah.
There are definitely a few very important risks, mainly on the domestic policies and domestic balances of the main coal countries, like China and India. If they stop their ramp up in coal production, then that will be super bullish. And if there are if there is more coal demand from these countries, then that will also be the bullish side. And on the supply side, we can also have the bullish risk from maybe another like typhoons or tornado or like any rainfalls that prevent Australia and Indonesia to export more last year. So those could definitely happen again. But currently they are on track, like in line with our outlook for the supply side.
Maybe one really quick follow-up, and if you're not able to take a view, it's not a problem, but is there a long-term climate policy risk out of Australia? They are a country I do worry about will somehow change their mind on exporting coal and maybe even someday LNG. Do you see, for climate policy reasons, there being some long-term risk of Australian exports going away within the next 5 years or some time frame?
I don't have a view specifically on that, but that is definitely a risk. And I think so Australia has increased their royalties a lot last year when the prices were high, so that the margins of the coal producer were not impacted too much. And in other countries too, like currently Colombia has been discussing their new national development plan, which looks not very good on the fossil industry. So that may also impact their production and exports. But I think generally these risks will carry out quite gradually, or like not impacting the production and exports like all of a sudden. So that's not really our baseline base case. Yeah.
So Hongcen, we're coming to the end of the time here. It's hard to let you go because I'm thinking I want to ask him about natural gas. I want to ask about China. I want to ask about Japanese nuclear power. I got all these questions. Maybe we'll have to get you back for another show, but we'll ask this as we wrap up. We're always thinking about what energy looks like 10 years from now. What's the mix? What are the technologies? Which countries are doing better? Which countries are doing worse? Power prices, power reliability, of course, impact and climate and the environment. When you think about energy 10 years out, what are the big pieces of it, whether it's coal related or anything else? But you spend all your time thinking about the energy complex, particularly coal, but what does it look like to you?
I think renewables will definitely be dominant in 2030s, but the fossil energies will still be there to keep the reliability of energy supply. And hopefully we can get some new technologies that will renovate the human energy supply, such as nuclear diffusions, which have got a few already breakthroughs in the past few years.
So last question, in that 10 years, will we see a peak coal demand moment, or will that peak coal demand be post 10 years from now?
I think, so currently, if you do not count China, then the increase of India in coal consumption will be more or less the same as a decrease of coal consumption from the US and the EU. So that will, I guess, depends a lot on China's coal policy and the energy policy. And with their renewables being developed at such high pace, I think it's quite hopeful that we can see a peak relatively soon, maybe around 2030.
So if I understand your math right, as goes China's coal policy, so goes coal demand over the next 10 years. If they're consuming more in 10 years, then you think the world is too.
Yeah, and I guess one piece of news may be encouraging that this year is the first year that the renewable capacity, the renewable power generation capacity in China is more than the coal or the generally thermal generation capacity in China. So that looks very inspiring, I guess, for humans. Yeah.
Now I have to ask you a quick question. That's like gross capacity? Or that's gross capacity. So we need to. It just depends on the weather.
Yeah.
Right.
Yeah, I think it depends on mostly the utilization. So renewable utilization is much lower than thermal utilization. So thermal generation in China is still dominant. So hopefully we can get more and more clean energies.
Well, you'll have to forgive me, Hongcen. If I didn't ask you that question, I was going to get a lot of viewer mail. So, I had to ask. Hongcen, it's been a delight. Congratulations on getting the report out. Congratulations on this role. It's very exciting, and we really would love to see you in Houston or New York or on that coal mine tour that we want to go with you.
Thank you very much. I look forward to those too. Thank you very much.
Wonderful. Thank you, Hongcen. Thanks, everybody.